Hi, on the premium membership, we do daily market updates. And today's public video is an example of such an update. So you can ask me any questions around any kind of altcoin, and I will have a look during the market update. So this premium video is not very recent because I can't just publish the recent premium content publicly, but still it should give a good grasp of what you can expect should you decide to sign up at thebitcoinstrategy.com. Enjoy the video and feel free to give this a like as well. See you. Good morning and welcome to another market update today on the 3rd of January 2022. There isn't too many changes regarding overall momentum, but luckily we've got a lot of questions from the chat. But let's first start with the current picture, right? So this is Ethereum with the 23 and 39-day moving average, a very continuous bleed. It looks like a pretty predictable movement at this point, so Ethereum doesn't look too impressive, especially given that the relative valuation to, for example, Bitcoin isn't that favorable, right? This is now Bitcoin divided by Ethereum, and one might argue that Bitcoin moves in this sideways trading range, and so Bitcoin looks, comparatively speaking, to Ethereum relatively cheap. Now here we've got the others dominance climbing again to new highs, so the altcoins, they are doing well. And so when we just look at total 3, so the market cap of all of crypto minus Bitcoin and Ethereum, so everything but Bitcoin and Ethereum, together with the 31-day moving average, we are still bullish on altcoins, right? So the overall picture hasn't changed. There wasn't too much movement recently. Now let's look into the altcoins that have been requested in the channel. First of all, Anchor. So this is Anchor in Ethereum, the long-term chart. And yeah, the issue with this is that these rallies, they come in pretty short, decisive movements, right? And then when the short-term momentum isn't very positive, we simply continue to bleed. Now, in terms of fundamentals, I very much like the Anchor project. I personally actually use it. So I've been toying around with a crypto trading bot, been using a JavaScript library called ethers.js, which allows you to directly interact with the blockchain. So you just create your own API over here, and then you can make regular requests to the blockchain. You can read the prices, you can make buying and selling orders. You can do all kinds of interaction with the smart contracts. So complete flexibility. And what Anchor allows you to do is basically, it gives you this bridge to the blockchain, right? You can use simple JavaScript, a very common language, and you simply add your API key in that code, and then you can make requests. So Anchor basically allows you to interact with the blockchain without being very skilled in all of this. It gives a very robust platform, and so fundamentally Anchor is nice. That being said, the price movements of the token, I think, are not that impressive. We had temporary movements to the downside of more than 80%. We have basically just kept pace with Ethereum, but Anchor is way more risky than Ethereum, right? So I'm not saying this can't go up again, right? This is potentially a 270% outperformance versus Ethereum, and this might be a short-term trade. So when you want to trade this, for example, with a moving average, you could just find your optimal moving average duration, which might be a bit longer because of the comparatively high volatility, right? There's quite a bit of fluctuation. So you might have to look at something like a 100-day moving average. And so we are pretty much now fighting with that positive momentum. This could potentially break out. That's how you could potentially trade this. I personally don't do it, but that's always the problem, right? With fundamentals versus the overall momentum of things. Very often prices, they don't really move based on the fundamentals of the project. They simply move based on demand, which is generated simply by hype, simply by how many people get awareness of a certain project. Now let's get to the next request, also from Ray. This is now Fantom. Ray is probably not the only one who's interested in that. And yeah, I was wrong when doing the last analysis that this resistance line here could be a problem. It wasn't at all, right? We just shot through this like butter. And overall, altcoins look promising, right? But on the other hand, there's obviously also risk over here. I'd almost feel more comfortable buying Fantom if we were to outperform Ethereum for another 30% or so. Because then we really have clearly an all-time high again, and Fantom does seem to move still in this old school way. Whenever we get an all-time high, we tend to get into price discovery, right? This is what happened over here. This is also what happened over here. And I expect that if we do hit another all-time high, we could shoot further up again. Fundamentally, I very much like Fantom, right? The transaction costs on the blockchain, they are very, very low. Using something like Spooky Swap is really nice because say when you swap something here, right? Let's say you've got your Fantom and you want to swap this to a stable coin. The fees that the decentralized exchange here uses is pretty low, right? It's 0.2%. Most other DEXs, they use 0.25 or 0.3%. And also the gas fees, they are also very, very low. So a swap like this on Fantom, it costs 0.04 FTM. So that's at current prices, maybe 6 or 7 US dollar cents. When you do a similar swap, say on Avalanche, you pay 30 cents or so. If you do the same on Ethereum, you pay like $30 or $60. So Fantom is a really, really cost efficient way to get in and out of crypto, to get in and out of Bitcoin, Ethereum, and the underlying statistics, they also look quite healthy. So if we look at the Spooky Swap usage statistics, we unfortunately can't get that to load right now, but once this works again, the graph looks very nice. So fundamentally speaking, Fantom is interesting, but right now the short-term price action is uncertain. It almost looks like we get into this sideways trading range here. So this really depends on your time horizon. If you're just looking at a few days or weeks, that's obviously hardest to predict, but it also looks the most dangerous. If you're looking at, say, 2 or 3 years from here, I think it's very, very likely that Fantom is going to outperform Ethereum further. Next, we've got Diego's request for Reef. So this is Reef in Ethereum. Looks somewhat like a sideways trading range. It's pretty hard to say though if this is a downwards trend somewhat or if this is a sideways trading range. There isn't too much technical analysis to do here because there's simply not a lot of data. And so doing these very short-term predictions, it does come with quite a lot of uncertainty. From the very first look of it, I would probably wait for a price versus Ethereum that's maybe at least 27% lower than where it is today. That being said, what's positive about Reef is that the trading volume right now isn't too high, right? So when we had the bleed around 1.5 months ago, where we went down by like 60 or 70%, that happened after we had a lot of attention on the token, right? When lots of people were buying in and then we got reduced trading volume and with it a bleeding price. We are not in that situation right now. So maybe these movements, they are not completely one-to-one comparable. This bleed here doesn't have to happen again because we don't have the same kind of trading volume. But still, this looks comparatively high in relative terms, right, over the last few months. But as said, these are very, very short-term predictions, very, very short-term views, and they come with a lot of uncertainty. And I also don't have any fundamental view on Reef. I would have to get myself more informed on that specific asset. Now here comes 2 questions for Victor. So regarding Solana and the dilution, right? So there's actually 2 ways to look at an asset in trading view. The first one is simply to look at it in terms of, for example, a stable coin, right? So Solana in Tether, that's what we get. This is simply the price. You buy at a certain point, you sell at a certain point. The other way to look at this is to only look at SOL, which gives you then the market cap. So you don't append any stable coin ticker symbol over here. In that case, you get the market cap, and here TradingView gives you a more realistic picture of what happens without dilution. And when you've got an asset that only grows by, for example, the additional inflation caused by staking, then it does make sense to rather look at the market cap than look at the price. But that's not always the case, right? Sometimes, for example, for Ethereum, the additional supply goes to the miners. It doesn't go to the people that hold the token or that stake the token. So you want to be careful with this. One way to also look at this is to simply do a comparative chart. So you could, for example, look at Solana's market cap and divide that by Solana's price. This way, we can see the inflation. And this also shows now a potential flaw that we have with these market cap charts, because they do seem to get adjusted in an infrequent way. So I don't think that Solana's additional supply just jumped from one day to the next by 470%. But this is what the market cap chart implies. So it does make sense to be somewhat cautious with market cap charts. You can see this in all kinds of different charts as well. So let's say, for example, we go for ADA divided by ADA USD. That's what you get. Same thing, a step function. But for some assets, it does work relatively well. So for Ethereum, it does. For example, ETH divided by ETH USD. That's what you get. This is much more of a chart that makes sense, right? An inflation over that time of around 27%. So the Ethereum market cap chart is pretty reliable. The Bitcoin market cap chart as well. So this is Bitcoin's market cap divided by Bitcoin's price. We can almost see the halvenings here as well. So the slope of this line is way steeper at the beginning than it is here at the end. The inflation is decreasing. Then what about Cosmos and Cosmos's underperformance to Ethereum? So that's the problem with the chart, right? The long-term underperformance. And I don't like to trade within those charts simply because time is not on our side. If we don't trade this correct, then we have to exit very quickly. We can't just simply wait this out. And that's psychologically a pretty hard game to play. So I stay away from these kinds of assets. And that's in general the issue, right? That's why I do like technical analysis and why I almost give this more weight than fundamental analysis. Of course, the fundamentals, they have to align somewhat, right? You don't want to just long-term invest in a Ponzi scheme where the chart looks really, really great, but the fundamentals are terrible. So the fundamentals, they do matter, but market dynamics matter as well, right? People feel comfortable in buying something that over the long term increases in value. And it's hard to convince people to buy an asset that simply doesn't perform long term. So the psychology of the market, in my opinion, really, really matters. And so I personally don't really like to go against the market unless I have a really, really strong conviction that something will definitely win over a significant share of a particular niche. If I don't believe this, I simply enjoy to go with the trend, right? The trend is your friend. And so that's why I stay out of these kind of assets. But of course, sometimes I make these kind of videos, right? And I say, better don't touch Cosmos Atom, and then people see how the price goes up by 66% and they don't have this long-term chart in mind. So of course these things, they can happen, but that's fine with me. I simply look at risk versus reward, and this looks relatively risky without giving enough of a reward, in my opinion. And we see something pretty similar for Chainlink, by the way. That's also why I don't discuss it that much. I actually don't like to bash cryptocurrencies too much. They just give thumbs down. But of course you guys want the honest opinion, and that's what you pay for. And here is Chainlink in Ethereum. And I probably don't have to say too much about this, right? You don't really have to draw that much here to see the issue with this chart. This simply does not look very pretty. But of course, short term, we could again rally somewhat, right? These kind of fluctuations, they are totally normal. The reason for this underperformance, by the way, it might be that the developers, they are selling. And there's also a treasury of a foundation, I believe, that also continues to sell. So there are normally fundamental reasons for such an outperformance, especially for an asset that's, in terms of market cap, not that large, but that has a lot of very eager followers, a lot of people that really like the fundamentals. If you still see an underperformance, that's usually because of the very early people or because of the project owners, they are selling. A similar thing can be observed, for example, in XRP. So I personally don't go into Chainlink, even though it looks cheap. I personally couldn't really sleep very well having this in my portfolio. And this is also now the discussion for Georgi, sorry if I mispronounce your name, regarding fundamental discussion of cryptocurrencies. So the issue is I try to cover a broad range of cryptos, right? And I don't think I can be very deeply informed on the fundamentals on each of those. And I try to cover the basics. I try to find out what's going on, generally speaking, around a cryptocurrency. But diving really deep into the fundamentals requires a lot of time, a lot of effort, and I might not even be the best at it. And I see there are quite a lot of YouTube channels that do exactly that. And my fundamental belief when it comes to trading is that momentum is more important than fundamentals. Fundamentals do matter, but they're just, in my opinion, a checkbox. What really matters is where the mass psychology is going, where the mass focus of the market tends to move. And what I think is important when it comes to fundamentals is usually tokenomics and its staking APYs. Because what we look at here are very often relative performances, right? Like how did the Link US dollar chart perform to the Ethereum US dollar chart? But say if staking Link would have an APY of 100% per annum, which it doesn't. But if we have a very high staking APY, then we would have to adjust these charts accordingly, right? Then just a sideways trading range against something would already be positive. For example, for Axie Infinity, you get quite a bit of a staking APY. So looking at this chart over here isn't even fair. We see Axie's chart outperforming Ethereum, but even if it now just goes sideways, even if it would continue to go sideways, that would be still a very strong positive for Axie Infinity, simply because of the staking APYs that we get. So that's, I think, the most important quote-unquote fundamental that's not really in the charts. The second thing to look at, if you can get this information quickly, are potential airdrops, because that also tends to move the market. If something is announced that when you hold a particular cryptocurrency, you might get another one simply by holding this at a certain cutoff, then this also tends to push demand by quite a bit. But that's the most I think I would go, at least that's how I personally approach this. I do watch videos on fundamentals of cryptocurrencies a lot though. So I do like to consume other people's fundamental research. Coin Bureau is my favorite, but there's definitely also other very interesting channels. Feel free to also share your favorite YouTube channels in the premium chat. But yeah, it's unlikely that you will see a lot of deep research on the fundamentals of a particular cryptocurrency. If I use a product personally, like Anchor here, for example, or like SpookySwap, I'm more than happy to talk about this, but I don't feel comfortable discussing fundamentals on something that I don't use personally or that I haven't researched in depth. But there's plenty of information out there, and I think you don't even need that much fundamental knowledge, that much knowledge about the underlying project, simply because momentum and mass psychology, I think, is really what's driving a lot of crypto price movements, right? How otherwise could, for example, be Dogecoin at number 12 and Shiba Inu at number 13? And these projects, how could they be more valuable in combination than the whole Avalanche ecosystem is, right? So momentum and psychology matters. Thanks again for all the questions. Keep them coming. I try to address all of those in the next market update. Maybe not again as a video, right? Sometimes I do videos, sometimes I do audios. The questions are very much appreciated, especially when there's not a lot of action happening in all of crypto. So feel free to ask anything and I try to help where I can. Thanks for supporting this channel and see you next time. Bye-bye.